Aloha folks, thank you so much for checking out this video. If you are new to my channel, my name is Mark, Mr. Dividend Investor. In today's video, we are going to talk about 3 cheap dividend stocks that are under $20 at the time of this video. So if this is something you're interested in, sit back, enjoy it. Do me a favor, like it, and if you want to share it to people that want to invest in dividend companies, please do so. Also, if you're not yet a subscriber, hit that subscribe button, hit that notification bell so you don't miss out on the videos that I put out. We are really close to 3,000 guys, so help us get in there. With that said, please remember that this is not financial advice. This is just me sharing. Let's take a look at these companies now, right? First company that I want to talk about is Ford. Ticker symbol is F. This is a company that engages in manufacture, distribution, and sale of automobiles. You can see I'm a big car fan. One of the things that I'm really excited for is the F-150 Lightning electric truck, as well as the Mustang. So those are two that I'm really excited to see. But as you can see, they have a good amount of electric lineup. This is a company that is focused on being part of a major player in the EV market, so that's something that I'm excited about. So definitely, if you're interested in that, definitely check this company out. Now if we go to tip ranks, based on their analysis rating and rating as a whole, you got 4 buys, 10 holds, and 1 sell. Price target is about $15 with the high of 23, average of 15, and the low of 10. Now if we swing to Yahoo Simply Safe Dividend, you can see based on the dividend safety score, they rated as 50, which is borderline safe. Their dividend yield is about 3.85. Now if you look at the key metrics, you can see not really great. Last 20 years, negative 11. Last 5 years, it's even worse, negative 30. If you can see from this chart, from about 2010, 11, you can see they were on an upward trend, and then after that, from 2014 all the way down to 2019, it was just stagnant, and then it went down. That's why it's 0 for both consecutive and reduction. However, they did return it in September. You can see from this chart. So I'm excited about that. Your payment details is on quarterly, which is in the months of March, June, September, December, and your annual payout will be 60 cents per share. If you're wondering about the ex-dividend date, August 10, which has passed. So moving along to Simply Wall Street, based on their analysis, you can see earnings are forecast for 16%, and then they have the earnings grew 240% over the past year. You can see some of the evaluations over here, as well as the price to earning ratio per peers, and then you got your price to earning ratio versus industry, price to earning versus fair ratio, and then you got right here, which is the share price versus fair value. $50 at the time of this video, based on their fair value calculations, about 25, which is so they're thinking that this is an undervalued stock of 37%. So if we swing to Webull, 23%, 23 analysis rated as a hold, you got 13%, which is strong buy, and then you got your hold of 52%. Price target, you got 32 at the high, 16 at the average, and then 10 at the low. Yeah. If we go to Yahoo Finance, you can see top institutional holdings. You got Vanguard right here, BlackRock, State Street Corporation. You got Morgan Stanley, Bank of America. So pretty good amount of shares, as you can see. Definitely a company that I'm bullish of. The second one I want to talk about is Wendy's. The ticker symbol is WEN. Um, if you ever, if you go to this company, I go to this company all the time. I buy their products. I love, their the burgers are really great. I remember going to college, and when you're in college, you have no money, so I used to always go to Wendy's and McDonald's, and it's one of those go-to as you were going to. So I definitely am a big fan of this company. Now, if we go to Simply Safe Dividend at the time of this video, it's at $19. Dividend safety score of 50, which is borderline safe. Dividend yield is about 2.57. You can see the key metrics. Last 10 years, 18%, which is very fast. Last 5 years, 12%, which is very fast. You can see there was a dip one time from 2019 to 2020, and now it's back up. So it started back up again. Payment details: March, June, September, and December. Annual payout 50 cents per share, which comes about 12 cents per quarter. Yeah. Now if we swing to tip ranks, smart score rated as an 8. You got your hedge fund holdings have increased. So you can see from this one, you can see based on their stuff it's neutral. Now if we go to Webull, 29 analysis rated as a buy, about 44 says it's a hold. You got strong buy of 20%. Now if you look at the price target, high of 29, average of 23, and then you got your low of 19. Now if we swing to Simply Wall Street, looking at their estimate using what they call the discount cash flow model, at the time of this video is $19. Their fair value is about 28. Pretty much they calculated about 30% undervalued. Yeah. Now if we swing to Yahoo Finance, you can see you got Vanguard, BlackRock, JP Morgan, Straight Street Corporation as top institutional holdings. So the last company I want to talk about is Kinder Morgan. The ticker symbol is KMI. This is an energy infrastructure company, natural gas pipeline. So they've been in this company for 25 years. You can see some of their products. You can see by the numbers, 83,000 miles of pipeline, and then you got 141 terminals that store and handle renewable fuels, petroleum products, chemicals, vegetable oil, and other products. Now, if we go to Simply Safe Dividend, based on their dividend safety score, they're rated as safe, which is 61. Dividend yield is about 5.86. Now, if we go to some of the dividend growth, last 5 years about 70%, which is fast. The last 10 years, not so good, 0, which is very slow. You can see again, it was starting to go up and then it went down. Now it's slowly going up. 5 years without a reduction, 4 consecutive years of increase. Payment details: you get paid quarterly, February, May, August, and November. Annual payout is about $1.11, which breaks it down quarterly to about 27 cents per quarterly. Yeah. Now, if we go to Webull, based on 20 analysis, they're rated as a hold. About 60% says it's a hold. You got your high price target of 25, average of 20, and then you got low of 17. Now, if we swing to Simply Wall Street, based on their share price at fair value, at the time of this video is about 18. Fair value is about 19, so this one is undervalued about 4%. And then lastly, you got your top institutional holdings. You got Vanguard, BlackRock, Straight Street Corporation, Bank of America. Pretty good amounts of shares, as you can see from here. Yeah. and then over here you got your top mutual fund holdings. So all right guys, so those are the three cheap dividend stocks under 20. I think these are great stocks. So definitely do a little bit more due diligence and more research if those are companies that you want to start investing. I think, in my opinion, those are great stocks to put in your portfolio. Again, not financial advice. All right, guys. Thank you so much for watching. Hope you like this video. Hope you like and subscribe. Hit that notification bell. Please be safe out there, guys. Stay cool. Keep investing. And I'll catch you guys on the next video, right? Take care. Aloha.